Well, hello, folks. Thanks for joining us today. We are talking about trading. What is some of the trading that I've done? Well, as you can see back there, I traded on the floor of Chicago Board of Trade. I traded in a lot of different pits, from the Fed funds to the S&Ps, Dow Jones, corn futures, even the beans. So I've been in a lot of those pits, trading everything from futures to options, and now even stocks and options on that. A little bit less on the futures these days, but I am still trading quite a bit here and there. I even do a daily spotting the trade, where I talk about trades that I'm looking for in the markets on any given time. So please check that out at Pro Trader Strategies before you go. And without further ado, we're going to be talking today about some of the things that I get asked most often about my trading. And one of those things is, how do you become a more consistent trader? Well, one thing that I would say is the overarching theme there is a lot of traders get involved in trading strategy, or in trading too big, if you will. So while you have an account, we're supposed to be trading maybe 5 to 10% of that account to each individual strategy. All right. So some people go in there and think that they've got a great idea, and that's going to be where they kind of push all in. Don't do that. That's where people and folks get blown out of these types of trades going forward. And then they get discouraged, or they're going to be gun shy the next time. All right. And maybe get out of a losing trade a little bit too early before it starts rebounding because of that past experience there. So while we're talking about trading bites here, one of the things that I've found over the course of my career that really helps me out is the fact that I write down all my trades. All right. I'm not only just writing down these trades on a piece of paper, I'm writing down information that kind of influenced my decision-making process here. So me, as an options trader, one of the major things that I look for in trading is volatility. I believe that volatility is going to determine our option strategy. Yeah, we come up with our bullish, bearish, market neutral, directional assumptions through chart analysis, or maybe you have a subscription somewhere. We come up with our directional moves. Now, the next thing, the most important thing that we can do is put on a winning trade, right? I mean, everybody wants to put on a winning trade, but we have to do it in the right environments. If volatility is high or low, those are going to be determining factors that are going to influence our trade. But going forward, writing down what you saw for that trade, whether it is a iron condor or just a bullish move, write down some things that influence that decision. I saw it on a trade page, maybe it was CNBC. The reason why I picked it was because of a bullish engulfing pattern, things like that. Those are things that when you write it down, you will have the data to go back to and review what happened the last time, what may have gone wrong. Make sure that if you have a losing trade, that you go back and review the next time. What were some of the mistakes, the pitfalls that I saw during that last iron condor that I might be able to avoid this time going forward? Another thing that is one of the major things that people fail to do and get caught up in is moving stops, or changing your initial level to get out of a losing trade, whether it's a bullish trade or a bearish trade. Getting out when you originally wanted to set up that trade is ultimately the place that you should stick to it. So when you're writing down things like this, you're writing down the strategy, you're writing down what you saw going on in the environment, what influenced your decision-making process in order to go with this bullish, bearish, market neutral decision. All of those things you should write down, little tidbits, so that you get yourself in a place that when you originally put on that trade, you can come back to that. Because there's so many times as a trader, even myself, will get into a trade and fall in love with it. We can't do that. We have to strip out emotion from these trades. We can't fall in love with trades. We can't think about them as money. We need to strip away all of those emotional ties that we normally associate to like money or value, and bring it back down to levels, all right, where we are getting out at this level, and you write that down, okay? And when you write it down, you're more likely to stick to that first initial thought, because you're going to go back and say, hey, I can't change that because I wrote it down. But when it's in your head, I've seen so many traders over the course of my history, see them say, hey, I'm putting on this trade, but this is where I'm getting out. And they have the most conviction you've ever seen. But as soon as it comes down to those levels, they start making bad decisions based on emotion. They know they're losing money, so they got to make it up. So sometimes people will add to that position. Number one, bad thing to do, add to a losing position. Two, then they change their stop and say, you know what? Now I see a different level that has a support. That's where I'm going to add a little more risk by lowering my stop here because I still believe in this trade. Now, that's not always a terrible thing, but it's, as a newer trader getting involved at the beginning here, you should not be doing that. Stick to your convictions. And if it breaks below that stop and it gets you out, all right, write it down. If it snaps back, then that's when you have that data to go forward from now on in your books. You can say, hey, I'm going to go back there and see what happened with that short put spread or this bullish assumption in NVIDIA right before earnings or something like that. So all of those things that you need to keep in mind, write down. If they pass through your head, you got a gut feeling, put those things down. You know, I got this gut feeling today that, hey, maybe I should get out of this trade. It's not at the profit level that I thought, or maybe it's starting to break down. It hasn't reached my stop, but I got this gut feeling that you should follow. That's something that, you know, I started out trading in college trying to get a psychology degree. So I always fall back on the psychology of the markets, if you will. And one of the things in the psychology of trading, the first thing I learned was somebody came up to me and said, hey, you know, hey, how are you doing trading today? And I started talking about how much money I was up. And he just started shaking his head. And I was like, what? You know, dude, I know I'm not as big of a trader as you are, but I'm having a pretty good day. And he was like, no, you're not. He was like, you're having a terrible day. And he was like, the reason why is because you're emotionally tied to this trade at this point, because you're thinking about it as the money you've made. Or even if you were losing money, you're thinking about the money you're losing. You're tying this trade to emotion. You can't do that. When we're trading, we got to think of it as a business. Get rid of the losses, add to the winners. All right. And that will change your perspective when you're trading. All of a sudden, you're going to lose some of that angst when you're seeing trades go against you. One, because you know you're going to stick to your rules, being, I know when I'm getting in, I know when I'm getting out. And then you're also going to be able to stay in those winning trades a little bit longer. You're not going to be thinking, hey, you know what? I'm up this amount of money. I can go out there and buy this. I can go out there and do this with that money. No, you're tying this trade to emotion and physical things that aren't really necessarily attainable right now. So what you want to do is continue to think about these as levels. If I get to this level, I'm going to take it off, or I'm going to take half off at this level. Stick to that. Don't ever look back and start saying, well, maybe I shouldn't have taken off half at that level. All right. Those are things that are going to get you in trouble going forward, because it may work out this time, but over the course of your trading career, it is going to come back to haunt you, because you will start trading outside of these rules, and you're going to start bending it, and you're going to start adding more risk onto the downside. You know, we used to talk about it. 20% drawdown is where you should get out of it. 80% gain to the upside, that's where you should get out of it. So 80-20 rule, if you will, on the losers versus the winners. So those are some little trading tips that I can give you on these Trading Bites videos. I have a lot more on YouTube and at Pro Trader Strategies. Please go there and check that out, because I think little tidbits from a trader, an old salty trader from the floor, where we used to write down our trades on cards, not necessarily on the papers here, but we could always go back to that and know on that date when it was time stamped exactly where we were during that time, and move forward from that. Having the data to look back on will give you confidence to move forward. So please, especially for you new traders, write down what your trades are, the date you did it, what was going on that day, maybe even what you were hearing in the news, what sparked your interest in putting on this trade. And that will give you the data going forward to look back on. Also, you will be more consistent because you are following what your original thought was. You start changing your strategy, it's going to start costing you money down the long run going forward. So those are some of the things that I found that helped my trading career, is writing the things down so that you have the data. You can realize where you might have gotten wrong. You know, this is how I've come up with a lot of my rules for trading with volatility. If you watch my videos, I talk about volatility almost exclusively because that is what's going to determine the type of strategy I put on. And I'm not talking the VIX, all right? I'm talking about implied volatility, and I go into that detail in just about every video I do. So please go to Pro Trader Strategies and check that out. And for you folks that are participating in this June collaboration, I'm going to give you guys this offer that you guys can exclusively take advantage of. It's well over 15 hours of content. For some of you newer traders, I show you from building from simple concepts to real life examples as to where, when, and why we would put on any type of trade, and the directional moves that we need to get out of it. As a matter of fact, I even throw in there the levels that we need to get out, how much you need to risk versus how much reward you need for each individual option strategies, and the probabilities of your success. All of those things will help you keep your powder dry and keep you confident, ripping out the emotion from all of these trades. So please take advantage of this. One of the major things that I keep talking to folks about is protecting your portfolio from rising interest rates. Right now, folks, that is going to decimate a lot of people's portfolios. You cannot chase higher interest rates by getting out of the bonds you already own and trying to buy the newer bond at a higher interest rate. I show you how you can counteract that to get that same type of coupon payment through protecting your portfolio through rising interest rates. So please take advantage of that. I thank you all for participating today in this ebook. I hope you guys have something to take away and will increase your likelihood of success going forward. That's all I got for you. If you can't take that, take it easy.